through the course of this year and through 2023 and possibly even a little bit of 24, it's going to be a grind. Unemployment will go back up. Inflation will be sticky.
Hello guys, welcome back to Christian Finance for your regular financial content. And today we're going to be covering the one and only Chamath Palihapitiya. Yeah, interesting name to pronounce. If you guys are even a little bit into the finance world, then you know who he is. And we're going to be going over what he thinks will happen in the markets in the short to midterm, my opinion on what he's saying. And then of course, I'll give you my own personal perspective on what's going on in the markets in the short to mid to long term. Of course, with analysis and data to back it up. And even though, yes, times macroeconomically right now are tough, but make sure to stay till the end where I give you a little bit more of a positive outlook on the long-term effects on the market.
Through the course of this year and through 2023 and possibly even a little bit of 24, it's going to be a grind. Unemployment will go back up. Inflation will be sticky. Real earnings will shrink. Consumption will ebb. And earnings will not be that great.
And yeah, I absolutely agree with what he's saying. 2023 and beginning of 2024 will be tough. We are currently in a recession, but it's not just the US and North America, but it's the whole world, right? Macroeconomically speaking right now, we have the war still looming around, right? It's affecting Europe particularly bad, but every part of the world is feeling it in some shape, way or form. As you guys know also right now, since we're struggling macroeconomically, typically cheaper alternative stores such as Walmart and Target should be doing great because people should be flocking there and buying their items. However, currently, they're experiencing a surplus of supply. And that's really scary when the two cheaper alternative giants are experiencing too much supply in a downturn economic time. Of course, another factor that's really bad right now is the inflation. This is from this year. Since February, the lowest we've experienced was 7.9 and even upwards of 9.1% from June to June, right? Which is really crazy numbers. We are at a 40-year high when it comes to that. With that, guys, I just want to take a second and ask you, if you're enjoying the video, smash the like button. If you're getting value out of the channel, subscribe. It really does go a long way. I do spend a lot of time into these videos, giving you these constant updates and putting quite a bit of effort into it. Once again, the only thing asked from you guys, subscribe to the channel.
Let's just say a stock goes down 50%. Even if it rallies 50% from there, it's still 25% off from where it was.
Yeah, people don't understand that.
And people don't understand
hard it is
that.
to climb back up the mountain.
So yeah. I would just think, we're going to feel this for a while. It's this inflation, as I've said for a long time, is going to be sticky and persistent. I think you're going to see Fed funds at or breaching 5%. This is a super volatile, ugly point in the market. This last year has been really problematic.
Yeah, I mean, he just said a few very important things right there. For one, yes, if a stock was to go down 50% and then it was to climb back up 50%, then that's only halfway until it actually goes back up before the initial bottoming, right? So that's something to keep in mind. And the interest rates, yes, a lot of experts currently right now are speculating we may go all the way up to 5%. I personally think that's unrealistic. I think we'll be close to the 4%, but we just have to wait and see how time works its magic. And also pandemics is one thing that's still looming around, right? Obviously not as bad as 2020, but they're still showing up in different places in waves. And quickly, if I was to just look at Michael Burry's tweet, who's also another well-respected figure in the finance space, you'll see that he said even the chart looks like a heart attack when the Dow Jones went down almost 530 points in a single day. And yeah, I mean, it really does look exactly like a heart attack, just going down lower and lower over and over as the months go by. And right here in June, everyone thought this will be the low of the cycle. And then we rallied. And then as a lot of experts once again predicted, we're going to be hitting lower. And we did. I even said that myself. I think even right now, this is no financial advice, do your research. They wouldn't be heading lower than this before we go anywhere near all-time highs for whether it is the Dow Jones or crypto. It's now almost been a year since the cycle high of 69,000 and now we're at 20,000, almost a quarter of the price of the all-time high a year ago. And again, this is a riskier asset, so typically speaking, in a downturn economic time, the riskier the asset, the lower down it's going to go. And in a bull run, if it's a good risk asset, it's going to go up higher than everything else, right? And one thing that I always keep referring back to was last year when I initially predicted we might have a crisis coming up. And that was when I saw the big billionaires like Elon Musk and Jeff Bezos really starting to sell off their shares. And yes, I've covered this a few times, but I really want to use this as a learning lesson for you guys. Typically, when the big money starts to buy, this is typically a good time to know that, hey, we're going to start to rally eventually. And when they start to sell, all at the same time, typically you know that we're going to be heading towards a bear market sometime soon. And that's what happened last December, right? You had Elon Musk, Jeff Bezos, Mark Zuckerberg. All of them were selling large amounts of their shares from their respective stocks. Elon, as soon as in literally August, midway through, sold another 7.92 million, which is equivalent to $6.9 billion worth of Tesla shares. And of course, he said that it was going towards Twitter, which is understandable. But still, when you see the richest billionaires selling off, then that should tell you. And that's a sign that we're either in trouble or trouble's ahead. And with that, guys, I just want to give a little bit of perspective. Obviously, right now, majority of the videos is going to be talking about negative things because we're in a bear market. And just based on my data, we're going to be heading lower, right? So I have to cover the truth and I have to tell you what's happening and where we're headed. However, I do want to give you perspective that in the macro scheme of things, 2.5, 3 years, right? We're not always going to be going down. We are going to go back in the bull market. Every 8 to 12 years, there's a massive recession of some sort, right? Like in 2000, we had the tech bubble. And then 2008, we had the housing crisis. And then now 2020, 2022, obviously we've had a combination of multiple macroeconomic factors all going against us, which yes, we'll have to figure out one by one for us to start rallying, but it will happen, right? It's just the way it works. Right when you think the market's never going to go back up again, that's when it starts to go back up. And when you think it's never going to go down, that's when it crashes, right? They get you when you least expect it. But with that, I want you guys to keep in mind, majority of millionaires, billionaires, they're all made during recessions, right? So right now is the time where you guys need to have an emergency fund, really do your research into what you should be investing in, and really preparing for our next bull run, right? Super important. Use my YouTube channel as a resource. Plenty of other YouTube channels, plenty of websites and books that you guys can use to really prepare. Spend the time. If you prepare properly and you have a little bit of capital, it can go a long way over a 3, 4, 5, 6, 7 year time period. With that, guys, the video is over. Let me know what other similar content you'd like me to do next in the financial space, of course. Like the video, subscribe to the channel. It does go a long way. And as always, stay diversified.